Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to share with you guys 5 high quality businesses that if you are an individual stock picker or you have individual stocks as well as of course ETFs in your portfolio, I genuinely believe these are 5 high quality businesses that you should own. I'm not saying this as a financial advice, I'm generally saying do your research, but these are really solid businesses. Now I'm going to give you the financials, I'm going to give you everything you need to know about these companies, and of course as always, if you are finding any value in any of the things that we're doing here, please like the video, subscribe to the channel of course. But before we get to all of that, I just want to talk about a couple of things before we get into these 5 amazing companies. I want to say thank you to every single one of you. There's about 7,000 of you guys, but that are subscribed to the channel, and of course ask me questions, part of the community, part of the Discord. I've been getting loads of amazing questions from brothers and sisters on the Discord, on the Patreon account, where you're asking genuine questions, and I can see the passion for investment. And when I started this whole thing, I genuinely all I wanted was to share my journey so I can inspire hopefully a couple of people out there, okay, to show you what I'm doing and what is possible if you are consistent. I'm not saying I'm a guru, I'm not saying I know what I'm doing, I'm not saying I'm a financial advisor or anything like that. I'm just a regular guy who saves as much as I can, invests in the stock market, and wants to share this with the ummah. Now there are of course people out there that may say different things to what just believe that what we're trying to do here, and and I don't really care about the negative side of things. People saying, oh, why are you buying this stock? Why? For me, I have a plan. I'm going to share my journey and we'll see what happens. And I've been honest and I've been transparent. And if you like that, of course, join this journey, because genuinely that's all I'm doing. I'm saying, I'm buying this company because for these reasons, or I'm selling it, or I'm just telling you facts every single week. I'm giving you information that from bottom of my heart. And I want you to know that, and I want you to continue, inshallah, supporting the channel if you can. 7,000 of you is absolutely ridiculous. When I first started this, I genuinely thought, you know what, let me just go out there, and if I can find 2 people who are like-minded, like that I can have conversations with, that would be absolutely amazing. And I've learned so much from you guys. Genuinely, I go into the Discord sometimes, and just read the comments and so on, see what the brothers and sisters are talking about, and the fact that a lot of people are sharing articles about things that they found. Sometimes I might not even have the time to actually do research. For example, a company like AstraZeneca, but someone will share an article of the reason why it's down 4% or up 5% on that day, and I genuinely appreciate that. That's all I wanted to do. That's all I want to do moving forward, inshallah. So if you've been part of the community, thank you very much. If you are new, welcome to the community and enjoy. Now, the only other thing I want to say to you guys is please like the videos, because it really helps the algorithm to actually reach out to more people, so we can actually have a lot more brothers and sisters basically on this journey. If you could do that, that would be absolutely amazing. Now let's go back to the 5 companies we want to talk about today. And these 5 companies, like I said to you guys, every single one of these companies, I genuinely believe they are excellent businesses, okay? And what I want to do is to give you kind of quick information about each one of the companies, and then you go away and do your own research. Now, each one of these businesses has a wide moat, which means basically they have a competitive advantage over their competitors and so on. They have excellent basically profit margin or net profit margin, whatever you want to call it. And what does that mean? It means a measure of company's profitability expressed as the percentage of the revenue that the company keeps as a profit. And it's really that simple. Okay, we're converting our basically revenue into basically net profits, which is really, really good. You want the company that you're investing in to actually generate more, basically more profits. So for that reason, the more profits the company makes, the more we can actually benefit from, because they can then increase their dividends and, do like buybacks and all of the amazing things that we want to see. Now, these companies have excellent compound annual growth rate for the last 5 years when it comes to free cash flow here, and they have been given out basically double digits basically total returns over the last 10 years, which is absolutely amazing. Now let's talk about the first company, and that's Visa. And Visa is one of those companies that everybody talks about. And I want to basically, brothers and sisters, to stop for a second now, because I talk about Visa and Mastercard a lot, and every time I talk about it, I get a comment saying how are they Sharia compliant. These companies are technology companies. They are the technology behind the cards that we use. They're not dealing with the basically the the sending money. So the transaction part is what they do. The technology in the cards, that's all they do. They don't care what's being sent but back and forth. They're facilitating basically for these transactions to take place, not to, of course, get involved and so on. And they get, of course, their cut from that. Now Visa has a 553 billion market cap, so it's a really huge company and currently trading $291 per share. Basically, in terms of dividends, I don't own this company for the dividends right now. I own it for that growth. As you can see here, 16% of the last 5 years. That's absolutely amazing. On 15 years of increasing that dividend, which is absolutely amazing. Now, in terms of the annual payout, you get over $2. Safety is 99%. Now, that's the highest any company can give up. Okay, so that's the highest any company can get. Now, the last 5 years, the compound annual growth rate for their revenue is 9%, which is good. Now, 12% when it comes to EPS. Profit margin, check this out, 53%, which is absolutely amazing. Return on equity, 47%, and return on invested capital of 36%. When it comes to profitability, this company is absolutely amazing. When it comes to the management, they do an amazing job. Free cash flow, almost $19 billion, and free cash flow compound annual growth rate, that conversion is about 10%. Now, total return the last 10 years, 19%. Can you imagine that? And they're expecting the earnings to grow about 11-12% every single year for the next 5 years, and is only now fairly valued right now. So $272 per share is where they think the price should be. $291 it is where it is right now. Now, quickly, if I want to show you the ratings from Seeking Alpha, as you can see, 4%. We've got basically $305 per share is where they think. 20 strong buys, 11 buys, 8 holds, which is really good. Now, earnings expectation is moving forward, double digits every single year for basically almost when it comes to EPS and revenue at the same time. Next one is, there's no surprise there, Mastercard is the next one. Like I said, same thing applies to these two companies. They're both Shariah compliant, but they're both technology companies. And as you can see here, this company is also 460 billion market cap right now. Dividend, again, I'm not buying it for the dividend right now. I'm buying for that growth side of things. 12 years of increasing, $2.64 is what you get. 99% when it comes to the safety. And when it comes to the free cash flow here, about the revenue side of things, as you can see here, 11% the last 5 years, and when it comes to EPS, about 12%. Now, profit margin 46%. That's absolutely amazing. Return on equity of 190% right now. Return on invested capital 66%, and $11 billion of free cash flow right now. And as you can see, it's about 13% compound annual growth rate for the last 5 years when it comes to free cash flow there. Total return the last 10 years, 21%. They're expecting it basically about 19% in growth for the next 5 years. That's expectation, so anything can happen, that anything can change. Right now, fairly valued, $465 per share, $490, almost to $500 per share right now. And Seeking Alpha right now, as you can see here, we are looking about 23 strong buys, 10 buys, 7 holds, no sales whatsoever, about 4%, 5% upside from where we are. In terms of earnings expectations, again, double digits every single year for Mastercard. Solid business, absolutely wonderful. I genuinely mean it. And the next one is MSCI. That's $444.6 billion. This company has a wide economic moat right now, $555 per share. Dividend yield, again, is not there right now, but I'm buying it for the growth side of things. As you can see, 24% in the last 5 years. That's absolutely amazing growth. Dividend streak of 9 years. Annually, we're getting about $6.40, 61% safety. That's just safe, by the way. And the 5-year basically revenue side of things, we're looking at about 13%, 18% when it comes to EPS, and profit margin of 46%. Now, return on equity is not there right now, but the return on invested capital about 36%. Free cash flow 1.2%, and the free cash flow conversion side of things, we're looking at about 18%. Now, total return in the last 10 years, we're looking at about 29%, which is absolutely ridiculous. Now, growth estimate next year 13%, 12% after that, fairly valued. So next 5 years, they're expecting the earnings to grow 12% every single year. Fairly valued, $520 per share, 556 is where it's at right now. Now, again, looking at Seeking Alpha, if we click buys, 4 strong buys, and then 8 holds and 1 sell. we've got 6% upside from where we are, $591 per share. In terms of earnings expectations moving forward, we're expecting basically almost double digits this year, and then basically every year from there onwards, and on almost 12% there, and then 8%, 9%, 9% again. So absolutely nothing to worry about when it comes to the growth side of it for the next few years. Next one is ASML, another company that I own in this portfolio, and you can see 315 billion market cap right now, wide economic mode, $802 per share right now. That's not right. I wish that was the case, but that is not the case. Let me double check this. Yeah, it's 0.83% when it comes to dividend yield. The payout ratio 27%. Latest increase was 5%, but the last 5 years about 24%, which is absolutely amazing. Now, dividend streak of 14 years, $6.65 is what you will get for every share. 82% in terms of safety. Revenue side of it, about 19% grew about last 5 years. The EPS grew about 33% and 26% when it comes to profit margin, 53% when it comes to return on equity, and 40% when it comes to return on invested capital. Absolutely amazing. Free cash flow $3.3 billion. Free cash flow compound annual growth rate for the last 5 years 21%, 24% total return, 56% growth. They're expecting to grow the earnings to basically 56% next year, then basically 22% every year after that, 19% discounted right now. This is one of the companies that have come down quite a bit recently. $990 per share is where the price should be according to them. Right now it's just over $800 per share. Now checking out Seeking Alpha, as you can see, it is a buy according to Wall Street right now. 29% basically strong buys, 7 buys, 7 holds, 1 strong sell, about 40% upside from where we are, $1,129 per share. Earnings expectations moving forward, we're looking about this year's flat, then 56%, 57%, 16, 23%, and so on, and then 31%, 10%, 17%, and so on from there. So absolutely nothing to worry about. And the final company we're going to talk about today is SPGI. As you can tell by, if you know my portfolio, I own every single one of these companies, and I genuinely believe they are great companies. Look at the financials and do your research, you will know exactly what I'm talking about. Now, 165 billion market cap, wide economic mode, $520 per share. Now again, dividend is not there right now, but the growth is absolutely amazing, 12%, double digits, and 50 years of increase in that dividend, despite being in 1% recently, but that's about 50 years of increase in $3.64 is what you will get for every share of this company that you own. Safety 99%, and in terms of revenue side of it, in terms of EPS 16%, 8%, profit margin of 25%. Check this out. That's absolutely amazing. How many companies can say they basically generating this type of profits from their revenue, which is absolutely amazing. Return on invested capital about 10%, return on 10%, and return on equity is also about 10%. Now, free cash flow right now we're looking at about $4.7 billion. Free cash flow compound annual growth rate 18%, 20% return total return in the last 10 years. Growth estimate next year 12%, 13% after that for every single year, 19% premium right now, $450 per share, around 445 is where they think the price should be. Right now it's 520, so it's slightly higher than where it should be according to Morningstar. Right, checking out this company now on Seeking Alpha. As you can see, it's a strong buy. We've got 13 strong buys, 8 buys, and 1 hold. No sales whatsoever. 5% upside from where we are, $548 per share. Earnings right now, we're looking at earnings estimates. You can see 15%, 12%, 13%, and when it comes to revenue, almost double digit there, 7% there, 7%, and then 6%, and so on. So absolutely amazing companies. There's nothing to worry about from Shariah compliance side of things. If you want to know exactly, this is basically based on the Zoya. This is the standards that they use, and as you can see, absolutely no issues when it comes to anything with Shariah compliance. So you can pause the video and have a look at it. But genuinely mean it, these are great companies, really good businesses to own. Profit margins and return on equity, return on invested capital are really good. Free cash flow, conversion free cash flow, total returns and expectations moving forward is great. As well as, of course, these companies are right now trading as fairly valued. But again, I would still add another maybe 10-15% off what is called margin of safety, just to be on the safe side. Okay. So that's the companies that I wanted to share with you guys. Just very quickly to show you, I have invested quite a bit of money. As you can see, S&P Global is actually my top holdings. So ASML, I've got about over £3,000 there. What else do we have here? We've got, let me just scroll down, Mastercard, there we go, 4,200. We're now in the green about 3%, which is nice to see finally. And the next one is S&P Global, 6,000 over 6,000 pounds right now invested. And then Visa about 4,400, and MSCI, where is that one? It's hiding here. There we go, 4,245 is also in the green. Remember, it was in the red not long ago. So that's the 5 companies that I own. I've invested over maybe closer to 20,000 pounds in these companies, and inshallah we'll continue to hold them, and I'll let you know if basically if anything changes. But if you're enjoying this type of content, please subscribe to the channel. And if you are completely new, I wouldn't touch these companies straight away. Go into buying maybe some ETFs, learn about ETFs, and invest in those Sharia compliant ETFs that we talk about in the channel. There's over 6,000, I think I've just realized, by the way, over 600 videos that I've done over the last whatever years. So there's a lot to basically get your hands on. Go into the playlist and go to the ETF section, and then just have a go at that. Okay, have basically learn about what types of basically ETFs are available to us as Sharia compliant investors, and then maybe buy individual stocks that have very high qualities, and don't touch penny stocks. And I'm genuinely mean it. You can lose a lot of money. I've got brothers who are right now losing over 20,000 pounds in some penny stocks in pharmaceutical companies that were supposed to go to the moon, but they didn't. So please be mindful of that. And if you are one of those brothers, honestly, just liquidate whatever you've got and get into ETFs and buying Sharia compliant basically ETFs and so on. Anyway, have a wonderful day. Assalamu Alaikum.